So we're going to go ahead and call this meeting to order of the Audit and Finance Committee for Polk County Public Schools. I will mention right away that this, in accordance with the Sunshine Laws, this meeting is being live streamed and recorded. So the first item we have on the agenda, if we're going to go right along, is the acceptance of the minutes from our May 4th meeting. Are there any additions or revisions that anybody has that they would like to see? I trust everybody had a chance to review those. Having said none or heard none, we will approve the minutes unanimously and record that and going forward. Our next item on the agenda, we have Jennifer Christensen here with Carl Riggs and Ingram doing the internal audit, and she's going to discuss with us the internal funds audit planning letter that we all should have received. So Jennifer, you have the floor.
Okay, thank you very much. Good morning, everyone. As Travis mentioned, my name is Jennifer Christensen, and I'm a partner with Carl Riggs and Ingram, and we've been engaged by the school board to audit the internal funds. And so just to give you a little bit of background, the internal funds are the funds at the schools where the students basically are raising the money. It's the fundraisers they have, the admission events, football tickets, dances, and any of the field trips that they have, which of course this past year is going to be a little different than in the prior years, but those are the types of funds we're talking about when we talk about the internal fund. And so we've been engaged to audit the financial statements of the internal fund. And then after our audit is done, the district-wide auditor will take our results and they will incorporate them into their district-wide audit. And so as part of our audit, we're going to audit the financial statements, and then we do a lot of tests of compliance. We're looking for compliance with the Florida Department of Education Red Book, the rules that they have for internal funds, the Polk County School Board rules, and also there is an internal funds manual that Polk County Schools has that kind of outlines all the procedures and the rules for internal funds. And so we select a handful of receipts, we look at fundraisers, we look at those admission events, we look at disbursements, and we go through different tests to make sure that the schools are in compliance with all of those different rules. And so one thing this year, we have a new accounting standard, GASB 84, that's going to be implemented in the year that we're auditing. And so basically there's just going to be, the district has come to the conclusion that they do not have any administrative control over these funds. These are funds that, again, are raised by the students, and the students, the clubs, the athletic teams, the classes, they basically determine how to spend the funds. And so because of that, this will be reported as a fiduciary activity, and it will be reported in the financial statements as a custodial fund. So also, in addition to auditing the financial statements and performing all that compliance testing, we're going to be preparing the financial statements. And this is just a service we provide for convenience to the district. And so as part of that, that's considered a non-attest service that we provide. And so management will then oversee the service, which basically means we'll prepare the financial statements, they'll review them, and they'll take responsibility for accepting them prior to us issuing the financial statements. So with that, I just wanted to give you a broad timeline of our audit. And so we, in July, we worked on the planning of the audits. We reach out to all the schools and we ask for information from them, which we've received almost all of it back. And then the week of August 16th, we will actually be out, our team will be out at the district office, and that's where we're going to be doing the bulk of the compliance testing while we're out there. And then after that part, what we do is we contact each school. So we have a meeting with the principal and the financial secretary to go over any preliminary recommendations we may have. And basically that's if we're going through those compliance testing. And if we come across something, let's say they collected money but didn't deposit it timely, then we'll go over that with them at that time. And that way it gives them the opportunity to look into it, because maybe you know, there may be a special circumstance of why that one time, why there might have been an exception, or, you know, it gives them the option to pull that item so that we can then discuss it, and maybe they didn't know exactly the purpose of the rule, or that there was that specific rule. And so it gives us the chance to really sit with them and talk with them one-on-one to explain what our preliminary findings are, so that they're not just handed a report after everything's over and they don't have a chance to kind of interact with us during the process. And so those interviews take quite a few weeks, because like I said, we have one with each of the schools. And with the schools and the departments that have internal funds, there's probably roughly 125 of them. So after we get scheduled those exit conferences with them, the principals then are going to draft what's similar to a corrective action plan for each recommendation, for each finding that we have. They're going to then respond to us and let us know what they're going to do to correct that in the future, who's going to be responsible for that, and when they plan on correcting it. And so once we get all their responses back, we'll put those in our report, and then we'll get a draft report to the district. We usually shoot for about, maybe the end of October. We usually have a few schools that, we have to follow up on a few times to get their responses back. So it is a process that takes some time, but then we want to make sure we get a draft to the district so that they can review it. And then a lot of times Carol and Lisa Hester will then, with their teams, we'll have a call and we'll go through the report, and then they also will have questions, and we'll kind of go back and forth, and things will get tweaked. And then by mid-November, we'll issue our final report. And that way we work with the district-wide auditor to make sure the timing works for them, so that, we never want to hold them up for their audit. And so the 2-page letter that I provided to you is just some of the basics of, a little bit of what I mentioned today, and then just a little bit of details. It has my information on there. We just want to open up this dialogue so that if there are any questions you have, you can contact me directly and you can ask those questions. And also, after our reports are issued, I do present to the school board. And if you would like me to present to your group also, I'd be more than happy to do that. Just let me know. So are there any questions about the audit, what we're going to be doing, or anything about the process? Yes.
In your preliminary field work, did you come across anything that would require you to expand the scope of your audit over and above what would be considered normal?
No, and normal is a word we're, as an auditor, we haven't been able to use for the past year, right? So when you say, have we come across anything? We definitely came across things that are different than prior years, but it was all expected, right? It was all due to COVID. So with internal funds, the money, a lot of times money's raised for a specific purpose to be spent. So with COVID, we're seeing in all our school districts, we're seeing very large decreases, maybe 50 to 70% decrease in revenue. But then we also see that same decrease in expense, because if they're not raising the money, then they're not spending it either. So it's a little different than maybe a typical financial statement where when something like COVID happens, you may see like a loss for the year. But with internal funds, they're pretty, the revenue and the expenses pretty much fluctuate in by the same amount. So so nothing that wasn't expected because of COVID, but that definitely is, has brought a little bit of a change to our audit this year.
Jennifer, this is Tom Jennings. I noticed in the minutes of our last meeting that there was issues with the Clifton Lars Allen report concerning supervision oversight. Is that a part of your engagement to assist the board in meeting that responsibility? We
do, and I'm not as familiar with the specific comment that they had, that Clifton Larson Allen had, but when we do our audit, we are looking at each school, and then we're also looking at the district as a whole. And so we'll communicate with them anything we come across. When it comes to supervision, there was nothing we encountered during our audit that would bring to the point where we would have a comment about it. We didn't have any matters or as far as supervision. With your district, you actually have some, when it comes to internal funds, you have some tasks that are done that are centralized and done at the district level. And what that does is that actually brings like an extra layer of segregation of duties, sorry, that we sometimes don't see at other school districts when everything's done at the school level. So if anything, we kind of have a little more separation. And like I said, we haven't come across anything regarding supervision that we had any concerns about.
This was in the area of payroll that Clifton Larson Allen made their finding of a significant deficiency for the lack of supervisory approval over the payroll function.
And that would be, you know, for internal funds, we don't have the payroll running through like we would for the district-wide accounts, but internal funds have so many, I mean, they all do, but there are so many little rules that, you know, you have the financial secretaries and then you have the principals that are overseeing that. And then you have the district office that's overseeing some of their duties that, that's not a concern that we have with internal funds at all.
Well, a comment.
Thank you so much. I'm sorry, Tom. Go ahead.
Excuse me.
Go ahead.
A comment that I make concerning that is that it seems like each meeting we have, Carol comes forward with a number of issues with schools that have issues with persons not following the rules because they haven't received the required amount of, or not received, that they have not listened to or paid attention to the requirements of the board with respect to these funds. And that's the reason for the comment.
Yeah, and with internal funds, you know, the difficulty with Polk is maybe the geographic area. I do have some districts where some of that training, they may have an annual workshop where they require, because that is sometimes a difficult task because the financial secretaries may not attend the training, or the principals maybe are not giving them the chance or the opportunity because they're so busy. And so I have some districts that will hold like an annual workshop where they make everybody come in person. Of course, this is pre-COVID. I think it's a little more difficult in Polk because it would require a lot more travel, but if I can certainly work with Carol and Lisa Hester and her group on, you know, if maybe there was something virtually that, you know, the hard part is the requiring them to attend, because that's the important part, right? They need to, if you're going to have the training, you have to somehow have the teeth to require attendance by the financial secretaries.
We, if I could add a little bit to that, we had a principal meeting about 3 weeks ago, and I can send that presentation that we did out to you guys if you want. But we did go over the fact that they were not signing the timesheets, what the proper procedures were. We gave them job aids again on how they need to go into SAP, our accounting system, to approve them as well. And we started the process with the update and the link to our training materials. And we're working with our professional development department. They've got 4 different dates that they've set aside for a principal training that we're going to go in and actually take all the groups in business services, finance, purchasing, risk management, to get the principals up to speed on what their responsibilities are for their jobs. And then professional development is also working with us for a secretary training. And what we're looking at is maybe doing a virtual 4-hour once a month. We're still exploring the ideas, but we thought maybe if we did a couple hours once a month and addressed any specific topic that had kind of come to the surface, it wouldn't take them too far away from their schools, but it would give us a chance to update and for them to ask questions as well. So we're working on that piece, but hope to have it up and running around October, give them a chance to get back in, get school started, settle down a little bit. And then our ultimate goal is to create kind of like a secretary Bible and a principal. That way, everything that pertains to their job will have a job aid for it. So when they get to that, things that they don't do very often, they can kind of flip through and have your guidelines And then the final piece is for the new secretaries, my department's going out and actually training them personally. So we have one set up next week for 2 hours that Mr. Pitts is going to go out and actually work with her to get her up to speed. So we do recognize the deficiency. And if you guys have ideas or other things to add to that, we really welcome them, because we want to do the best we can and convey the info to our staff.
Hi, this is Lisa Hester. I just wanted to add too that we do trainings once or twice a year through internal accounts specifically. And there's also the last training that Luke Whitty did was it was recorded and actually is on our website, so that new secretaries can go out and actually go through a full training as well.
And just to add to that, we developed internal accounts training from the same information that Lisa Hester's department uses. We developed an online Moodle course, which is available 24/7 year round. And we also have one for payroll. And we have required it at different times. We've required them to either to take one or the other as a refresher. So we've got those things in place as well.
Excellent. I think an overview would be like, this is why we do what we do. That's why we're here and this committee's here. Carol and her team do an absolutely fabulous job in the oversight. And we're here to ask those questions when we see those deficiencies as they continue to arise. What are the disconnects? If that's training, is there turnover to where somebody's coming into that role? And as these roles switch, you know, obviously it's you're picking up and putting on a new hat. So there's going to be things that are missed, but ultimately the training tools are there, and we just have to be diligent in making sure that those individuals responsible are held accountable. So I think we're doing a fabulous job with that. Jennifer, thank you so much for your input and for your helping us out with that. We appreciate you and you being here today.
Okay, thank you very much for your time.
All righty, moving right along. Carol Matthews is going to discuss the history of district financial audit results. Carol, you got the floor.
Thank you. So Mrs. Fields thought that it would be good to give the committee a brief history of the results of the district's financial audit, since we have so many new members. And these audits that I'm speaking of today are the district-wide audits that Jennifer made reference to. So we have had an unmodified, previously referred to as an unqualified opinion on the financial statements, which is your highest level of assurance, with no material weaknesses or significant deficiencies, the two highest levels of findings. We've had none of those for the past 7 years. But as you know, presented at the February meeting, our auditors, Clifton Larson Allen, considered the absence of supervisory approval of payroll, which Mr. Jennings mentioned earlier, as a significant deficiency. So that's the first one that we've had in quite some time. Prior to the 2012-2013 fiscal year, the district received significant deficiencies or material weakness findings related to the financial close process in multiple audit years. It went back many years. But those issues were resolved, and the district has not had those findings repeated since that time. So we just wanted to let the committee know we've come a long way. There's always areas for improvement, but overall our district financial audits have been clean with no significant issues. I believe Ms. Brooks may remember a time she served on the committee, you know, a few years ago, and I think she was on the committee when we had some of these issues. Ms. Brooks, would you like to make any comments about that?
Yes, I was, and I'm so glad to see that we're not experiencing any of those activities. Yeah, it was a little rough there for a little while, but I'm glad to see that we have come through.
Yes, ma'am.
And I would mention too, as Carol brought up, Mrs. Field, she is our sponsor this term for the school board, and she is not here today due to unforeseeable circumstances. So we definitely miss Mrs. Fields here, but she is with us as always in spirit. We're going to move along to the finance update. And for that, we have Heather Jenkins. Thank you, Heather. You got the floor.
Ms. Matthews sent 3 documents out that I'll go over with you guys today. The first is our May financials that we presented to the board. So through May 31st, our revenues in general fund are 0.32% more than the prior year, but are a little bit behind the current year's projection by 5.81%. Overall expenses are lower compared to the same period of the prior year by 2.42%. And expenses remain in control or running 10% below budget through the fiscal year. As of May, we predicted our fund balance to be around the 7.06 range. The closeout is still in process. And what that means is as we close our year, end of July and August, we continue to pay our expenditures and record revenue that's received. So we are narrowing in on our final fund balance, and it does go between 7 and 8%. It was at 7.5 and then a little bit lower. So we'll be able to actually give you that actual fund balance at the time of the final budget. The second piece is our tentative budget. So we presented that to the board, and I will go over the major changes. So our millage went down 0.106 mills from fiscal year 2021. Our required local effort was 3.687. It's now 3.581. It's still 2.76% above the rollback rate. And what that means is the rollback rate is the amount of the millage that would generate the exact same revenue we had last year. So we are generating a little bit higher. Our property values have gone up and continue to rise. That's usually an inverse. As the property values go up, the millage goes down a little bit. And it also, we see a different effect in the FEFP, which is Florida Education Finance Program, the amount of funding we receive from our state. The FEFP was $1.3 million higher for the second calculation than the conference report. And some changes are the compression adjustment increased $740,000. Our turnaround supplement, which is the money we use for our lower 300 schools to help bring them back up to where they need to be, decreased almost $800,000. Last year, we contributed an additional $2 million to that program. So we are going to have to make a contribution this year. But with our ESSER dollars, we are reviewing how we can best serve those schools and bring the grades back up and give them the additional service that they need. Safe school allocation increased $31,000. Our McKay estimate decreased a little over $346,000, but the Family Empowerment Scholarship increased $3.5 million. So McKay and Family Empowerment have been rolled into one. I believe that this McKay allocation is for those district schools, because you can still choose to McKay from one district school to another. That funding is not for external sources. Our required local effort contribution increased $1.2 million. So as you can see, the change from the conference report to the second calculation is about 1.3. That's predominantly due to our increase in required local effort. Basic discretionary increased 1.3. So based on these numbers, and we're still in negotiations with our unions for salary increases, but based on our funding for next year and different things that we're putting into the budget, we think we'll end between 4 and 5% for fiscal year 21-22. However, we're still working through that process. So we will bring the final budget back to the board on September 7th to discuss, and that will have all of our plan changes in it at that time. Do y'all have any questions on the budget or the millage? Dr. Hahn?
Yeah, on the report you sent out, I just have a couple questions. The last sentence under general fund, expenses remain in control and are running 10% below budget. That's really good. Who gets a pat on the back for that? How did you manage to accomplish that?
Well, that's still a result of the pandemic and a result of a large vacancy rate that we have. Those predominantly, the fact that we didn't have as many field trips or staff travel, we do have a large vacancy rate. Different expenses that we were able to charge to the ESSER funds for cleaning supplies and PPE and various items that the schools need. So this is a little bit, it's a good thing, but it's a little bit of a misconception. We're going to see this going through this year and next year as well, because we do have those ESSER dollars. But the ESSER funds are a federal one-time stimulus payment, and they are not recurring. So the expenses that we charge to that should not be recurring expenditures. And at a future audit committee meeting, the Council of Greater City Schools has a lot of good literature that talks about how you deal with this one-time funding and how you best use it to support your school districts. I'd like to bring that back and share a few high points with you guys about that, because as we watch our fund balance increase, if we're able to do that, it's in preparation for the ultimate decrease. There's something when you get federal funding they refer to as a fiscal cliff. So you're good for 2 or 3 years and then whoosh, over the edge. But a lot of school districts, when we got the ARA funds, had taken those funds and added positions or paid for positions with them. And then they failed to plan to put them in their original funding source, which the year that funding ended, I think there were about 8 school districts that hit a negative fund balance. And that's how I ended up in Florida. My prior district was one of those. So we just have to be really careful and plan to the best of our ability to, we can do it. We just have to watch what we're doing.
And I have one more question. Under capital projects, revenues are down 20%. Expenses are up 74% roughly. Is that going to create a cash flow problem at some point?
No, the expenses are up because we have the sales tax bond, and our construction of the 3 new schools has really ramped up. They're going to open this year. So you're seeing a greater expense outflow because we're using the sales tax bond. Okay. And our, let's see, the last piece of information, we have our quarterly report that I sent out. We're running about the same with our investments, and I was a little remiss. I should have sent you guys, and I can have Carol send it out after the meeting, our investment policy changes. So our investment advisor came to our last board meeting, and we've made a few changes to the policy to allow us to get the greatest return we can in the current market. All of our rates are still down pretty low. They range, the month-end yield is from 0.12% in, or let's see, actually 0.5%. Ooh, worse than that. Wells Fargo, 0.01%. It ranges from that up into 0.45%. Which is our cash pool, and our Sawgrass investment portfolio is 1.31%. So rates are still down. They've gone up a little bit. We are stable. Our policy is safety and liquidity first. So we go along that path, but we do work with Water Walker Investments, who keeps a very close eye with us. And like I said, we've made a few changes to our investment policy to enable us to get the greatest yield while still remaining safe. I will forward that to Carol, and she can send it out to the group.
All right, any more questions for Heather? Thank you so much. We appreciate that.
You're welcome.
You guys do a fine job. All right, and now we're moving right along to our internal audit update. Carol Matthews, you got the floor again.
Thank you. So you will likely always see payroll audits on our quarterly summary because payroll expenditures are the largest percentage of the district's operating budget, and we have over 120 schools. So we perform these audits on a rotating basis throughout the year. so that all schools are audited over time. We schedule a meeting with the principal and the secretary at the conclusion of each audit and go over each finding and allow them to ask questions. And the feedback we get is that this is an excellent learning tool. So we talked about training earlier, and we do that, and that's positive and that's a good thing. But it seems that this is probably one of the better training tools, is to actually get an audit, because it's their particular situation, their information, and it's just something about an audit that kind of gets their attention. And when we sit down with them, and over Zoom now, but when we talk this out with them, it does kind of seem to sink in a little better. And, you know, they can ask whatever questions on a one-on-one basis. So we found these to be very positive. And like I said, we do these continually throughout the year. We have findings that are typical across schools, and we've covered those in past meetings. We have that supervisory approval issue. We have non-exempt employees working over or under bits of time, not a lot, but, you know, here and there, not understanding that, you know, they have to stick to that schedule, because otherwise we have to, you know, pay them overtime, or, you know, they have to use leave or get their pay docked if they were out of leave. We have deficiencies with time records and leave forms, and those are typical. You just, you know, we write up whatever findings that we have, and so typically you will have errors and things of that nature in those areas. But some of the schools this past quarter where we had atypical findings, ones that we don't typically find, I'm going to let Sean talk to you about those. He's been working on payroll audits. So I will let Sean explain some of those to you.
Thank you, Ms. Matthews. Yes, as Ms. Matthews said, that for the most part, most of our payroll audits are just the common findings we typically find over the course of all the schools. But I'll go over a few that we had on a couple schools that were just atypical, something we just don't normally see. I'll discuss our John Snively Elementary first. This particular school, they had quite a few unrecorded absences that the payroll secretary had failed to input into our payroll system. We had a total of 5 employees for that school just during our sampled week that we sampled out, that had personal leave, 2-hour, doctor's appointments or something that just didn't get put into SAP. We did notate that the employees did fill out the leave forms in a timely manner. So it was just kind of an oversight of the payroll secretary getting those put into the system, so that way they could be deducted from their leave balances. Also with John Snively, we had an instance. We sampled overtime for 1 month. I believe this was in March. We found that one school nutrition assistant, she had been pre-approved for the entire month of March to work up to 2 hours every day for the month of March to kind of cover some short absences they were having. The payroll secretary went ahead and put into our payroll system those 2 hours for every day from the start of the month to the end of the month, instead of doing it as the school nutrition assistant accumulated those overtime hours. And it just so happened that during the entire month, there was 2 days that that school nutrition assistant did not actually work over. And so we found that within our audit that she didn't actually work over those 2 days, but we had still paid her for them because the payroll secretary had gone in prior to the time being used up and put those in. So we did have to have her correct that, and that has been corrected. And then during our sampled week, we had a school nutrition assistant that had worked over 3 days out of the sampled week, worked over 2 hours each day, and that it was approved to do that. However, that did not get put into our payroll system. And so that was another instance where the payroll secretary just failed to put in that overtime. So we had to have them correct that, and they did. So that way that employee could be paid for that time. because there was quite a few different atypical findings for this school. I think Ms. Matthews did have a call and they did have like a one-on-one conversation with the principal, and the principal agreed that maybe this payroll secretary was maybe not the right fit for this job duty. So she has made or has been making arrangements to assign those duties to someone else so that hopefully these instances will not continue. And then our other schools that we had some atypical findings, we had some atypical findings for Lewis Elementary and Lewis Anna Woodbury. These are two separate elementary schools, but they had the same principal. So we kind of did these payroll audits together. We did two separate reports, but we met with the principal and both payroll secretaries when we had our conferences. We met them together, not only because it's the same principal for both schools. Each school's payroll secretary was the other school's payroll secretary's backup. So we did those meetings jointly so that way they could both see, each payroll secretary could see the findings for the other school as well, since they were each other's backup. For both schools, we did find that, I know Ms. Matthews put principals not approving every exception is a common finding. Sometimes they only approve it a certain percentage. Unfortunately, under this circumstance, the payroll or the principal was not approving any of the exceptions, none of the leave time, sick leave, or anything like that for this entire last fiscal year. So that's why that's an atypical finding, because there was no approval done on the principal side to do that. On Lewis, we also had Lewis Elementary. We also had some couple unrecorded absences. We had two different employees that had time that was not put into the SAP system until we found the deficiency during the audit. That has been corrected. We had them correct that while we were during the audit, and we did notate that the employees did fill out those leave forms in a timely manner as well. So it was just an oversight of the payroll secretary that missed those two certain instances. And then on Lewis and Woodbury, we had the same. I won't repeat it again, but the principal approvals, the same principal. So she was also not approving any payroll exceptions for that school as well. We did have an instance that with we had a custodian that had used both of her 2 15-minute breaks and combined it with her lunchtime to go to an appointment outside the school, as well as the principal allowing an extra hour to attend this appointment outside. So she was gone for a total of 2 hours. But unfortunately, according to the custodial collective bargaining agreement, they do not allow them to use their breaks together, and they do not allow them to add them to the front or to the back of a lunch period. So we had to inform them of that, and the principal allowing her to leave for that extra hour. The principal did not have her make up that time. So we had to let her know that does go against federal wage and hour guidelines, that for any non-exempt employee, they have to work their contracted hours. So we spoke to the principal about the corrections that need to be made there as well. And that is, those are the atypical findings that we found in those payroll audits.
Thank you, Sean. Does anyone have any questions or comments? Okay.
I'm wondering, was that principal in that training that Heather mentioned earlier? Or just curious.
I don't know if we would know that offhand. Were those required principal meetings, Heather, for all principals? Yeah. And of course, what we're auditing may have been prior to her attending that training. I'm not sure.
It was our leadership retreat, Carol. It was pretty much the first time we get together prior to. I did just send you all that info. So
Thank you.
it was step one. We know we have a couple more to follow up with.
Okay, if there's no other questions, we can move on to inventory, and I'll let Cece talk to you about inventory.
Okay, good morning. Our department reviews the inventory process and the results for the fiscal year after the departments have all completed their inventory. The inventories consist of expendable supplies that are held for consumption in the course of regular district operations. This year, as of June 30th, the total value of all the inventory was $9,556,936. Broken down over the departments, they're listed in our recap, but maintenance shops had $4,637,634. School supplies, $1,098,715. EERS, which is electronic equipment, $1,063,407. Food, $984,309. Maintenance warehouse, $770,358. Custodial, $512,626. And support services, which is transportation, $489,888. Now, as recommended by the Auditor General, we verify that the team members that are counting the inventory are not team members that actually have a hand in actual everyday processes of the inventory. So they tell us all that before they start their inventory. We analyze the adjustments necessary to reconcile the recorded count to SAP with the actual items on hand at the time that they actually count. We require, if they have a variance of 0.50% adjustments, that they provide a management response and explanation as to what was the purpose, what was the reason for that variance. This year there were none, so it was a good year. Although there's a couple things we did note in our reports. In school supply inventory, they wrote off $6,122 worth of obsolete inventory, and that has to go before the board and be approved before they can actually write that off. So they had approved, had that approved at a school board meeting prior to inventory, and they wrote that off. Food inventory had $5,875 worth of outdated product that they wrote off and disposed of. There was some tuna out of date, so they wrote that off. And support services had received some hand sanitizer that they used to install in the school buses in the amount of $69,139 from custodial services. They erroneously received that into their inventory instead of treating it as a plant-to-plant transfer. This was not discovered until we performed our year-end analysis. So we worked with them and business process support to rectify the error and just inform the personnel how it should be, how that similar transaction in the future would be recorded. So we got a management response from them, although it wasn't an adjustment to the quantity, because it was such a high amount. We asked management to respond as to what happened there and just explain. So overall, it was a good year, and that's it.
Thank you, Cece. Anyone have any questions or comments about inventory?
Cecilia, what method do you use in valuing the inventory? Is it first in, first out, or last in, first out, or?
Carol, do you know what they use?
They use a moving value, as they've explained to us. Forget exactly what they call it, but it's like a average. If we're talking about the price, it's like an average moving value, something like that. That might not be the
yeah,
term.
I'll jump in. It is a moving average. Hey, it is a moving average price based on when the items come actually into the inventory based on the market value or the price that we paid to bring it in.
Thanks, Lisa.
Mhm.
Okay, anything else on inventory? Okay, the next thing on our quarterly summary is admission tickets at Ridge Community High School. The Internal Accounts Department reconciles admission tickets and keeps a perpetual inventory on those through a year-end inventory that is submitted by the schools, and throughout the year from deposit reports, they have to fill out a report of tickets sold. And so they log those sold tickets, and that's how they reconcile. They have a beginning inventory, the sales, and then their ending inventory. So they ask our assistance with this particular school because they couldn't reconcile those tickets. So Sean went to the school and conducted a physical inventory of tickets on hand and verified that the school had submitted an accurate year-end inventory, which they had. But the problem came about because ticket bags after one event were not immediately reconciled with the cash, and those same ticket rolls were reissued for sale at subsequent events prior to being reconciled. So it became just a real mess. So it's difficult to determine with certainty the number of tickets sold and cash collected, but we went through all that, analyzed all that, and determined that 109 tickets totaling $470 were reported sold twice, which was just a reporting issue, not a fund shortage. And 72 adult tickets were reported sold at the student price. And the athletic business manager was not certain if they were sold at the student or adult price, but that's a $216 difference. And 49 tickets were refunded and resold at subsequent events, which made it very complicated. But the Booster Club made a donation of $230 to cover any potential cash shortage. So we don't feel like, the school was out, hopefully, any funds. But we issued a report of findings and recommendations to the school to correct deficiencies in accounting for tickets, including admission tickets and cash collections should be reconciled immediately following an event, and any discrepancies should be researched at that time. Report of tickets sold forms should be completed timely and accurately. Funds should be turned into the school office for deposit the next business day. Ticket refunds are prohibited unless an exception is warranted, and then refunded tickets should be maintained for audit purposes. Tickets should be sold in sequence to prevent loss and inaccurate reporting, because they tore off a lot of tickets ahead of time and got those out of order. And the athletic business manager is not new at her job. She's been doing this since 2018. So it just seemed to be, she knows what to do. It just seemed to be one of those situations where, since it wasn't done correctly after that one event, it just snowballed into kind of a mess. Not a lot of money, but still we have to, be diligent about those internal funds that benefit our students. Any comments or questions? Okay, and then the last thing on our summary is we submitted the internal audit plan for the 21-22 fiscal year at the July 27th school board meeting. The internal audit charter requires school board approval of an annual audit plan within 60 days of the beginning of each fiscal year. Of course, the audit plan was created from a comprehensive risk assessment of the school district and covers as many higher risk areas as possible given our available resources. As you know, the school board employs an internal audit staff of 3 employees, and we utilize external specialists in certain areas. And audit plans must be flexible to account for unanticipated demands such as unscheduled audits and investigations. And that's all the internal audit has. We have some questions or comments? Travis, I'll turn it back to you.
All right, thank you so much, Carol. You guys always do a fabulous job. I'm going to open it up now for public comments if there are any. Hearing none, we will go ahead and adjourn the meeting after setting the next date. So tentatively, we have scheduled Tuesday, November 2nd at 9 a.m. Are there any objections to that next meeting date? Hearing none, we will adjourn. I appreciate each and every one of you for being on today. As always, you guys do a fabulous job. It's a pleasure serving on the committee with you all and look forward to seeing you next month. Or no, excuse me, not next month, November. Next quarter. Appreciate you all. Thank you so much.